they have this at the back of their mind. So as soon as they see something that's rolling over, they will sell. So it's a kind of psychological thing. It's almost like a self-fulfilling prophecy. But we really have to just be aware of it. Now, what volume price analysis will do for you is it will throw up all sorts of signals. And if you can read the chart through the prism of VPA, and VPA is I said, price action volume, candles, candle patterns, but also support and resistance. What it does, it first of all, it removes that kind of innate bias that we have, and you really just focus on the chart. And what I want to show you is actually, this is the 60-minute chart of cable, which sorry, I say cable, it was Aussie dollar, which I wrote about yesterday. In fact, let me bring up the version that, where is it? No, I've pulled up the wrong one. It was the Aussie dollar. The Aussie dollar. Here we are. This is on the 60-minute chart, and it was just such a good example. If I put the time up here, there we are. So where are we? Where we're at 8 o'clock is the London session. We can see the Aussie dollar was basically trading in a congestion coming up to London. It did actually sell off here, as we can see, just at the European Open. You have to read the volume also in relation to the session in which it is created, as it were. So that's quite a big down bar, not a huge amount of volume. Moved lower, moved to the top of this low volume node on the volume point of control. Then we had some buying coming in. We can see this from this candle here. Again, volume is the same under here. So really, what does that tell us? Well, not an awful lot. This is the hourly chart. So within this candle and within this candle, certainly if you were on the faster time frames, there would have possibly been an opportunity for you there. But it really, once it gets into the London Open, it then moves higher, hits the resistance that we have. This is the price-based resistance, doesn't get back to the volume point of control, and then actually begins to sell off over the rest of the London session. And really just before we come to, it was just after the US Open we've got here, which is 1500, which is 3 o'clock in the afternoon. We have this candle, we have the move lower. Again, this support here in this region, it actually coincides with an important price region on the Camarilla indicator. And then you have the up candle, and you have this bullish engulfing candle. This is a very, very strong candle pattern where the price moves lower, then the second candle totally engulfs the previous candle. There's a lot of volume underneath there, and so it moves higher. By that time we come to 9 o'clock, we come to the end of the US session. We know things are quietening down. There's not a lot of participation. It kind of drifts lower, moves sideways, but as you can see here, the volume dies down as you would expect. And then it's into the US session as we wait for the RBA. And of course, all the good news that's in the market at the moment about the PMI has certainly given the Aussie dollar a nice big boost. Now, this is on the hourly chart, and obviously, again, it's patience, and if this is your time frame, you would just have to wait for these signals to play out. But these signals here simply repeat. They do repeat on every single time frame. This happens to be the hourly chart, but you will see this on a minute chart. You will see it even on a second chart. This is what volume price analysis will do for you. You will see these signals. You will look at the volume. It takes away the kind of emotion that can be triggered, as particularly in fast and furious moves. The candle patterns, they will help you set up. They will point to the trading opportunities. How you take those trading opportunities, we've discussed this before in webinars. I'm looking at one chart. This is the hourly chart because I particularly wanted to show this, how a currency pair you can have a shift of sentiment in a currency pair from one session to the other, and you have to be aware of this. But what it also highlights is this bullish engulfing on the 60-minute chart here. you would have a faster time frame and possibly a slower one on the other side. And how you would pick that up on a faster time frame is you would see maybe a hammer on a faster time frame. And do you go off a hammer? Do you take a trade off a hammer on one time frame, or do you wait for maybe some kind of validation on a slightly slower time frame? Really comes down to you. It comes down to how aggressive you are as a trader. And in fact, I had a trader email me not email me, send me a message on Twitter. He sent me a little section of a couple of trades that he's taken. One trade was off a shooting star, and it had been successful, and he was really pleased about this. A shooting star is a very strong signal on a chart, but as the move had as the waterfall had progressed, he had then reversed and gone long on what he thought was a hammer, but it wasn't a hammer. It was certainly a candle where the down candle, there was a wick to the bottom of the candle, and a buying had come in, but it wasn't a hammer. The price hadn't gone back to the almost the open of the candle, and he couldn't understand why he was stopped out. And I said, look, the first signal you took, it's the shooting star, is a very strong signal, and with a lot of volume. And in fact, if we have a look at cable's a good example of this on the daily chart of cable. Very quickly. Hit the right one. There we are. Yes, and cable is a perfect example of this. Right, this was Friday's candle for cable. So we had a shooting star with a decent amount of volume. So come Monday, what is our expectation? Well, our expectation that it is actually going to go lower. It did go lower, but in fact, because of the dollar in that was a down candle until the US session, and in fact the dollar then started to sell off. So in this candle here, cable, very much like the Aussie dollar, it was trading to one side and then trading to the other. And I will just say about the British pound, it was something I picked up on Forex Live, which is a great site, by the way. Adam there said, oh, August, he talks about seasonality a lot, and he says, yeah, the British pound August hasn't always been a good, it's been a time when people sell cable. Now you looked at that candle on Friday, you think, oh great, it's going to be time to sell. And you look at the move that cable has had, you look at the number, it's just all up candles here, and you think, oh right, well it's probably it's had 1 2 3 4 5 6 7 8, oh, it's time for a sell. Well, yes, it possibly was time for a sell, but look what happened yesterday. It did sell, but then the buying came in again, primarily, as I said, driven on this occasion by the US dollar. So seasonality is very interesting. Candles and candle patterns, certainly when you have these strong signals such as shooting stars and hammers, by all means, pay attention to them, but just ultimately you have to trade what you see on the chart. And certainly in Forex, be aware that what happens in one session may not carry through to the second, to another session. This is the beauty of this market. It is 24 hours, but it presents all sorts of trading opportunities to the long side and the short side.